Hey everybody, it's Robert Barber with the Moeller&Barber real estate team here in our continued financial series as it relates to real estate. And I'm here today with my good friend Alexa Price from Caliber Home Loans.
Good morning.
And Alexa is our preferred mortgage and financial person and team member and expert as it relates to real estate. We always lean on her for those questions that come up. And this continued series, what we hope to get out of this for you is answer a lot of great questions, get you thinking about planning, get you thinking about how you're going to be getting into that next home, how you're going to make your finances work, but most importantly, who to talk to, who to get connected with, and we hope this is a great resource for you. So today we're talking about a dreaded combination of words, mortgage insurance. And I'm going to turn it over to Alexa to talk a little bit about mortgage insurance, maybe how to get rid of it. Maybe you don't need it, but what's it all about? And we're going to we'll keep it short. We'll put everything down in the comments. So Alexa, tell us about mortgage insurance.
So mortgage insurance is a necessary evil.
Okay.
What it does is it's a great benefit to MI. It allows you to have less down payment into a property.
Okay.
That's really what it comes down to. So you will have MI unconventional if you don't put 20% down.
Okay.
And you will have MI on FHA no matter what.
Okay.
So MI is just part of FHA.
And that's most of what you're going to see, right?
And people say, what is MI? It's supposed to reduce the risk as a lender. So if you stop making your mortgage payment, we can kind of recoup some of that. I don't know that it actually does that, but it's here and it's staying and we don't have a way around it. So
it's part of the process.
We just deal with it. Exactly.
It's in the baking.
It's in the baking. So we get a lot of questions about how do I get rid of my MI?
Okay.
I mean, I would say pretty much once a week we get that phone call.
Well.
So there's a really quick answer for FHA. If your loan was originated after June 3rd of 2013, FHA is permanent.
Okay.
So the only way you're getting rid of FHA, if it's pre that date, which is June 3rd, 2013,
okay.
Any loans before that, you call your servicing provider and there's steps.
Okay.
Anything after that, refinance, which is a great option right now to refinance for FHA to get you out of mortgage insurance.
Okay.
Rates are low. People are taking cash back out again because of equity. A lot of opportunities there.
Sure.
You know, renovation to products. So you're dropping your mortgage insurance and you're able to lower your payments. It's amazing. Conventional, there is a two-step part of that question. So one is, have you had your loan for 2 years?
Okay.
You most likely signed something at closing saying that MI is part of your program for 2 years.
Okay.
Now there is a step 2 to that. So if it's not been 2 years, there are 3 ways to drop mortgage insurance at the non-2-year mark.
Okay.
Okay. So if when you purchase the property, you have your appraisal.
Right.
And say it is within 120 days of that appraisal being done, and you sell another property. Right? Happens all the time with relocations, especially in Florida. You can pay down based on the appraised value within 120 days to 80%. And we can drop your mortgage insurance. Okay. You're putting your own money into it.
Right, but you have, that's exactly right.
Correct. So, that is your funds.
Right.
Not appreciation of the property. You, Robert Barber, has now called in and said, I closed 120 days ago.
Right.
Right, we use that appraisal. Now, if it's 121 days, then a new appraisal has to be done. Okay. Right, that's it. So you're putting, again, we call it skin in the game. So you've sold a property, it's been 125 days, now you're going to call in and we're able to order a new appraisal. The lender orders, don't send one in, don't order it on your own. Bad idea, right?
But I'm still paying for it.
But you're still paying for
it.
Okay, step 3, you've done renovations to the property, right? So instead of giving us money towards it, you have maybe added a room, or you bought a great deal and it appraised more than when you purchased it, but now you've also put money into the property itself.
Right.
Okay. So
but we're not talking about just a new vanity. We're talking about, right? Okay. Let's be clear.
No.
A significant investment in materially investing in the property.
Exactly. And it doesn't mean just sometimes people think it's just as simple as a new roof. That's really not. Right. You have to have a roof. It has to be a watertight roof when you close, so a new roof doesn't really do it. And then just make sure you keep track of what you put into the property, because now when the appraiser comes out, you're going to have to provide to that appraiser a list of what you've done to the property. And They will be able to see what you did and didn't do, because there are pictures of your home most likely on the MLS, and they can see those pictures.
Right.
So they'll see the floor and they'll know if it was you or not.
Right.
So, but there are ways to drop the mortgage insurance. Now, this is a lender-to-lender specific situation.
Okay.
So I'm speaking for Caliber. Now, a lot of lenders follow the same process, but the key is not taking matters into your own hands.
Right.
Call your servicer, because it may not be, and most likely if you're watching this, Caliber didn't do your loan.
Right.
So you'll want to call your servicing provider. Your loan officer can be a great resource for the questions, but we are not the ones that handle that process. So there's always an 800 number on your coupons.
Right.
Call in, ask the questions, and say, I haven't owned my property for 2 years. What are the steps?
Gotcha.
But there are options. There's also refinancing, of course. But, those, it's costly to refinance.
It is.
So if you're paying your loan down, Caliber's awesome. They recast at the same time.
Okay.
So if you're paying your loan down, you're dropping your MI, will actually reset your payments based on the new amount that you owe with your current interest rate.
Nice.
But each company has what's called recasting. Usually. So ask about recasting and ask about dropping the MI.
All right. Well, maybe in a future episode we'll hit about recasting and talk a little bit more about that. But one of the things we wanted to bring you today is just some information about MI and how it works. And but again, you heard it from Alexa. We're going to put all the information down and below. Call your loan officer, your servicer. But again, make sure you have a financial expert as it relates to your real estate, because it is so important. Thanks, Alexa.
You're welcome.
All right. We'll see you next episode.